Hey traders, welcome back to our channel. Today we are diving into the world of the crypto trading to explore the differences between the spot and futures trading. Whether you're new to the crypto or you're just looking to expand your knowledges, knowing the difference between these two types of trading is very important. First, let's break down what each of these methods means. Spot trading is the most straightforward method of the investing. So for example, if you want to buy a Bitcoin for the 60K on the spot, you buy it and you own it for the 60K. You own one Bitcoin. In this case, when the price drops 50%, you still own one Bitcoin, but your asset has a value of the 30K. And you are still owner unless you decide to sell it for any price in the future. This method is very popular with the long-term investors. They called holders. So they basically buy it, they hold it, they can go through the drawdowns, they are not gonna get wiped out by the leverage, and they simply sell it when they want to. Now, let's talk about the futures trading, which is more suitable for the traders like me and you. Futures contracts are the agreements to buy or sell the asset for the predetermined futures price. But unlike as a spot trading, you can basically speculate on the shorts as well and on the longs, not only on the price rise, but also to speculate on the shorts. Another futures trading advantage is that I can basically open a larger position with a smaller capital. So for example, with 10x leverage, I can use $1,000 to open the position with a $10,000 value. But leverage is double-edged sword. It can help you to make a larger profits with the smaller capital. But as I spoke about the drop on the Bitcoin a minute ago, the same drop with the using the leverage could really wipe out your capital. So you must use this leverage really wisely and with the correct risk management. And the last thing about the futures trading is that these contracts are time limited. They have a expiration. So you basically cannot buy a contract right now and hold it for the 10 years, right? There is an expiration. So that's the main differences, but let's compare them side by side. So the spot trading, more suitable for the long-term trading because the contract doesn't have an expiration. You directly own the cryptocurrency. You don't have leverage and you basically can earn only on the price rise. On the other side, the futures trading is more complex. You don't own the asset, you own the contract, which has an expiration, so it's more suitable for the short-term traders. You can use the leverage, which is risky, but can give us more gains, right? And the last most important thing is that we can buy and even we can sell short, right? So we can speculate both sides. So it's more suitable for the short-term traders and speculators like us. Understanding differences between the spot and futures is really very important because if you are a long-term investor, you will not be buying the futures, right? If you want to speculate on the short term, the futures are more suitable for that because you can use the leverage, and that's the most important two aspects of this in the crypto trading. Okay guys, so I hope this video makes it clear for you whether you want to decide to buy on the spot or trading on the futures, and I hope you like this video. Subscribe to our YouTube channel, our social media, and I see you in the next video.